Hello, this is Charting Man Dan of TheChartGuys, where we teach the little guy and girl how to utilize charts to manage their own trades and investments. What do I mean by the little guy and girl? Well, we just had 2 directives signed halting the implementation of a rule that requires financial advisors to act in the best interests of their client. Let that sink in a little bit. The big wigs on Wall Street can play with your retirement and hard-earned money without your best interests at heart. We currently have hundreds of members taking charge of their financial future, and we would love for you to come check out a free week with no credit card required to see if our services would be beneficial on your path to financial independence as well. What we offer, we have a separate course of over 5 hours in length on when to enter and exit positions. And in terms of what we do daily, we have nightly videos, key levels updated each morning before the bell, 2.5 hours of live daily webcam coverage in the morning and in the afternoon, and over 7 hours of educational videos. All of these links can be found in the description of this video. Come check us out. Thanks for watching. Let's get on to the technical analysis. Hello everyone, looking at SPY on the daily and weekly time frame. Also going to be looking at XLF and XLK, the financial and technology sector. Those are the 2 biggest holdings in the S&P 500, and I've been watching the very strong correlation between the financial sector and SPY. Since the election, they've pretty much been going hand in hand, and now going to be watching the technology sector as well, because in my opinion, if we do not see the financial and technology sector pull back, we're not going to see the S&P 500 pull back, and I've been watching them all 3 trade in unison over the past week. So SPY, we had a little bit of a double top the past 2 days at the all-time high, and we were unable to break it today, even though we closed right at that level. So 235.14, 16, and 09, the high of the last 3 days, and the close at the high of the day today does show the bulls have momentum. This is a green Marubozu candlestick where the bulls controlled the entirety of the day from the open to the close, and we have not broken the higher low pattern. Even when we had that bearish day, and you can hardly even call it a bearish day, but compared to what we've been seeing, Thursday was a bearish day. The bulls bought that dip, and then we saw a lower open, and they bought that dip again 2 times in a row. So this kind of action, those 2 buying of the dip to end the week, does indicate that we likely see a new all-time high heading into next week. So all we need is a couple pennies from where we closed, and we'll get that level. The only resistance we're looking at being at all-time highs is the upper Bollinger Bands. So on the daily time frame on Monday, or Tuesday I should say, we have Monday off. That's going to be up just under 236, right around the 236 level. And on the weekly time frame, it's going to be pushing 238 and not really in the picture right now. Increasing bullish volume, 4 big green weeks in a row, and some really solid continuation. And you look at XLF on the daily time frame, and the candlesticks and the range are so similar. So let's just compare to see this correlation. We had sideways trading, then we had a pullback at the, let's see here, that was back in the end of January. Then we had our high, higher low, lower high, higher low, bull break, and then a little bit of consolidation. And on SPY, we had sideways trading. There's our little dip, high, higher low, lower high, bull break. So it was just a very similar pattern, and it has been since the election. So XLF had that same consolidation. Bulls buying the dip on Thursday, really buying the dip Wednesday, Thursday, and today, Friday. Gap down open and a close at the high of the day. So we have the high up here at 24.57. Looks like that's going to be tested next week. Looks like a bull flag of consolidation leading to continuation is likely. In the weekly time frame was a long bull flag on the weekly, leading to continuation with the bullish 4 weeks in a row. So a huge breakout after the election, bull flag consolidation, and now we have that continuation. Look at this technology sector. We have been on absolute fire. This is the 11th green day in a row. We closed at the high, and we have been shaking off bearish reversal candlesticks. There's been very little sign of the bears in the technology sector. It's been on absolute fire. And we look at the upper Bollinger Band resistance. We've just been grinding up against that level as it continues to ascend very rapidly. So pretty much 6 days in a row, we've hit that resistance and been unable to break above it. But as long as it keeps moving up, the price is moving up with it. So that upper Bollinger Band is going to be in the upper $52 range on Tuesday. And the weekly time frame is breaking out. And the weekly bulls are in absolute full control. We're up at the highs, and there is no sign of any pullback. So with the current conditions we're seeing, yeah, it feels overextended, definitely. It feels propped up. Everybody's saying that. But we have to keep in mind, use the charts. It doesn't matter what we think is going to happen. It matters what the charts are telling us is most likely to happen. And right now, the charts are not telling us a pullback is coming. So if you're trying to time the top, you're likely giving away money, in my opinion. You could be waiting for some signals. Sure, you're not going to time the top, but you don't need to time the top to make money. You wait for a signal that there's going to be a pullback, and then you act on that afterwards. A bearish reversal candlestick, if you want to be cautious, you wait for a bearish reversal candlestick and confirmation, waiting for that pullback, and we're not getting that on the S&P 500, nor the financial sector, nor the technology sector. So the three big boys here continue to run, and we'll watch to see how much upside we get into next week. Don't fight that trend. If you're not comfortable going long up here because we are so overextended, that's absolutely fine. Just sit on your hands and wait patiently. So I appreciate you watching. I hope you have a great long weekend, and we'll check back in soon.